Good day, everybody. Welcome to the Trick Trades video lesson series. We'll get into it here. The first one we're doing is candlestick basics. This is just a review to get people oriented with candlesticks and get them familiar with kind of mock examples and then real life examples as well. So we'll get into it here. Okay, so a candlestick. This is the type of chart that you want to be using. It gives you the most information in each candle. This is a bullish is green, bearish is red. These are filled in. You can set it on your charts to have hollow candles as well. I usually set my green candles to hollow. It's all about what you like, right? What's most comfortable for you. That's what trading is about. It needs to be comfortable. So we'll get into it here. This is the body. The real body is your filled in part. That gives you on a bullish candlestick, your open price is right at the bottom and your close price is at the top of the body. These wicks, that's your high price. That's the high it hit depending on your time frame, and the low that it hit depending on your time frame. And then a bearish candle is opposite. The open price is at the top, and the close price is at the bottom. The wicks remain the same with your high price, your highest point, and it shows you how much it's moved, and the low price as well. So we'll get into a few examples here. I know this may be basic for some, but for some it won't be. This is new, so just go through the entire, just sit through all of this because there's going to be lots of really good information. So these are your types of bullish candles. Okay, now remember your bearish will just be opposite. Your wicks will be on the opposite ends. So this is your most bullish type of candlestick, and I'll explain why. Because you have a open price and a close price, which means when this opened, it ramped up for that entire time period, whether you're using the 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, daily chart, weekly, whatever, it doesn't matter. It all remains the same. So your most bullish, it opens and then just drives up and closes strong. These are the type of candlesticks as well that you want to look for on the daily chart. A lot of people, they want to look at daily charts that they want to know what closed strong, but you don't want to flip through a bunch of intraday charts to find that out. You can just do that on the daily, and you look for a candle with no wick, meaning it just closed strong. It closed at highs. This is the most bullish, second most bullish as well, and this is a hammer candle. And the reason it's the second most bullish is because it opened and it sold off, but then this dip got bought up, meaning buyers were in complete control and they bought it up and it closed at highs. This is a really good indication. Like let's say when the price is coming down, just watch my mouse. When the price is coming down on a dip and it bottoms out and then it really sells off, but then it gets bought back up. Like that's a really bullish indicator, right? So then this is a pretty basic, they call this on this panel a normal bullish. And yeah, for the most part it is. It's just a normal bullish. We got a real body, we got a top wick, we got a bottom wick. These can be varying in sizes. It's kind of a medium type of candlestick. So this here, it's a doji looking candle. It's not quite a doji, but most people call it a doji. I'll even call this a doji. You got an open price and a close price that are pretty close together, and it sold off a bit, and then it ramped up, and then it sold off, and then it kind of closed right in the middle, right? So that's why it's neutral. The least bullish, and this is the exact opposite of this one, is you had an open price, it ramped up, but then the sellers got in charge. It got sold off and it got driven back down. That's people like this wick here. This wick right here is someone or a bunch of traders that are hammering the price down. They're hammering the price down. This is a rejection candle. If you see this at a top, this is what a death candle looks like, right? So this one's a really good one to know, and I have some really good examples of this. So here's just a few examples on, an illustration type of candle pattern setup. So you got your dojis, right? And we've all seen these, and it's these dojis really take effect in a liquid stock. Now, when I'm showing you all these, you got to remember they work better in a liquid stock, a 1 million in share traded or higher stock. Because that's when price action, when there's an actual market for the stock, like the price action is, it's to be trusted, right? If you get this in an illiquid stock, it's not the greatest, because you'll get a bunch of dojis, and you'll get engulfing candles when it's not really bullish. It's all over the place. But in a liquid stock, these can be almost taken as gospel. They're very good indicators. So you got your dojis. We've all seen these. This is just a basic doji. This one is they call it a gravestone doji, dragonfly doji, and then a long-legged doji. So with this one, its opening price and close price are at the exact same price, and the sellers were in charge with this one. This is, I guess, a bullish doji. Like if you saw this at a bottom of the chart on a daily, that's a good indication that there's a trend reversal coming. Same with this. If this one was at the top, it's good for a trend reversal as well. Meaning if this was at a top, it more than likely a trend reversal to the downside is coming. And this is just lots of price action, but it's very indeterminate. The market is unclear. So engulfing candles are they're very important. Okay, so this is a good trend reversal indication as well. So let's say it was getting sold off. So you got candlestick, 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 candlestick. This is kind of the bottom, and it opens up even lower, and then it drives up. That's a good indication to buy that dip, to buy this, especially if it puts in one more candle that breaks this high. That's a really good indication. This is a bearish engulfing. So let's say you got we start down here and it's working its way up. So candle, 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 and then it opens up higher, but then gets sold off. We've seen this a lot on junk stocks that ramp up and everyone wants to keep buying, but then they get sold off. And these sell-offs are because of the professional traders out there. They know when to take profits. So when you see these bearish engulfings, get out, because especially if you're playing small caps, and a lot of us do, the next candle could be even bigger to the red side, and that's that's when you get into trouble, right? So, and this is a bullish harami, sorry. What this is you have a sell-off, and then there's a bottom, and then it gaps up slightly, right? You see that gap up, right? Because it didn't open at the same spot as the previous candle closed at, so it gaps up. That's a strong indication. When there's gaps, gaps are a big indicator of price action for strength and weakness. Because if you look at the bearish, um, you get the price getting driven up, but then it stops and it gaps down a little bit. Now there's a gap down in price. That means that there's more than likely a big trend reversal coming. And this is a good indication right here that this next candle in the series would be a big bearish candle, right? So, and here's a kicker. This is kind of, it's kind of similar to the Harami because there's a gap involved. So a bullish kicker is something getting sold off. You get a red candle, a bearish candle, and then it just drives right up because technically the price action that candle should open somewhere up in here and it gaps way up. It gaps over, completely engulfs this candle. The gap is engulfing. This is like, you could also, I guess, call this a engulfing gap candle because it gaps way up, right? You see that? And same with the bearish kicker. It like technically the price action, the next candle in this series should be right in here, and it's not, right? It gaps way down. It blows through this price and gaps even further, and this will sell off hard, right? So here's some more here. A dark cloud cover. Um, it this is almost, it's kind of, they're all very related to one another. And a dark cloud cover, it gaps up and then it basically covers this. Like, the reason why they call this, these are all Japanese candlesticks, right? And it'd be like the sun's up here and the shadow, like if you took a trend line, you drew it here, you drew it here, it would the shadow would completely cover over top of the previous candle. So this is a good indication. A piercing. So a piercing candle, a lot of swing traders will use this. This is a nice little tidbit. They look for piercing candles, and they will long a stock, and that'll be their swing entry point. I know a lot of swing traders that's all they take. This is one of the setups that I would take on a swing trade. So it's getting sold off. If you follow my mouse, it's like candle, 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 and then this one, and the price opens up and it pierces into this price action. It pierces into the following day's action, and that's a very bullish indicator. And like I said, if you had a moving average right in here, let's say somewhere in this area, the 9 EMA, as well as it pierces through the previous day's price action, and it pierces through the, let's say, call it the 9 EMA, and then above, that's a very good indicator. Now, a shooting star happens at the top of a trend. A shooting star is also a death candle. The wick isn't quite long enough for a death candle, but in an intraday basis, I will take this as a death candle, okay? And I will instantly short that. I love the shooting star, but I call it a death candle. So the trend is coming up, and then you have this. This means that the sellers have overpowered the buyers in the trend, and more than likely there's going to be a trend reversal and it's going to sell off. It's gonna dip. It's gonna pull back. Hammer happens at the bottom, and it's the same thing. So you get the trend following down, and then at the bottom, it if this was red, right? I wish. Oh shit, there's a hanging man right there. My apologies. Same thing though. You can get these at the bottom or the top. But the buyers are in charge. Any way you want to look at it, the buyers are in charge. And if you remember one of my previous slides, this is the second most bullish candlestick. Hammers are very, especially green-bodied candle hammers are very bullish. So you definitely want to remember that. A hanging man, same thing. It's you know, it's a hammer, and it's very bullish. Um, they call this a hanging man. That's really not what I consider a hanging man. I would consider this a hanging man, um, because the buyers are in charge. It's a bullish indicator, right? The dip is getting bought up. So them calling it a hanging man isn't necessarily true. Um, So, and this is a morning star and an evening star. I don't really follow these candlestick patterns too well, so I'm not going to cover it. Like this is the trick trades video lessons, and I'm teaching you the stuff that you need to know and the stuff that you don't necessarily need to know. I don't follow the morning star. I don't find them very reliable. When I first started out years ago, I followed candlestick patterns to a T. I took them as absolute gospel, and that's another thing I want to tell you guys, that you know all of this stuff needs to line up. You need other information. You can't solely go on candlesticks. Don't be a sheep. Don't just follow one type of setup or whatever, because excuse me, it's early in the morning, guys. um yeah, you need to look for multiple things to line up. The more things you can line up, the better off you'll be. So I kind of disregard these, so I'm not even going to cover them. These are really good. I use these all day, every day. Tweezer bottoms and tweezer tops. Great indicator of trend reversal. Great indicator. Um, so, like, especially on a dip, when you're looking to get into a stock on a pullback, tweezer bottoms are really good. They're the close price and then the opening price are basically the same, and then you have two wicks on a two separate candles that are, you could basically draw a trend line and they almost double bottom. I mean, give or take a cent. Okay, guys, there's always a little bit of give and take. I like to play with a little bit of wiggle room, because you got to remember, in the markets, these candlesticks, all they translate into are people buying and people selling. So you need to bring in a little bit of psychology into it. So that's why I give it a little bit of wiggle room, because we're dealing with humans, right? And humans are, although we're orderly, we're, we're still kind of chaotic, right? Like, especially because all of this translates into money. And when are humans the most emotional and the most crazy over money, right? You know what I mean? So that's why I always give a little bit of wiggle room. This I look for to short when I see these tweezer tops on a big trend up, and I see these tweezer tops, I will short that. I'll short that, and probably 8 times out of 10, you get a nice pullback. So here's a few more candlesticks. This is a candlestick cheat sheet. I do like this one, because it basically goes over everything. These are your bullish candlestick patterns. These are more patterns, right? Um, you got your hammers. You see that you get the trend reversal after the hammer. Um, same with the hanging man here at the bottom. I don't really follow this one too much, but I do love hammers. The dragonfly fly doji as well. I mean, it's basically just the buyers are becoming in charge. You got your dojis, your spinning tops, your maribozo, your stars. This because I don't want to say I'm completely short biased, but I do lean more to the short side, as most of you know. So these are patterns right here. These are candlestick patterns that I follow a lot, and they do work out well, like the shooting star and the gravestone doji up at the top of a trend when the trend's driving up. Those are they're basically death candles. It means it's over. And we went over these and what this is. These are your two patterns. You got your tweezer tops, dirt cloud cover, bearish money, bearish engulfing, bearish kicker, and these are all the exact same, but on the bullish side. Um, I'm not going to review these too much. I just, you guys can always replay these video lessons and really really study these. Like I said, I mean, don't follow them to a T. They need to line up with other indicators. And as these video lessons get more involved and in detail, wow, you guys are gonna love it because I'm gonna show you all sorts of stuff that nobody shows you, nobody teaches. And the people that have been around in trick trades for a while, they know that the type of information that you guys get here, it's ridiculous. It's absolutely ridiculous. Okay, now we're going to get into actual live examples. Okay, and with my live examples or real world examples, I'm only showing you the ones that I care about and that you should focus on. There's a million different candlestick patterns. These are the ones to focus on, and these are real world examples. Okay. Okay, so as you can see here, I annotated a chart, two hammers right before the reversal, and there's actually three here. That was kind of a mistake, but whatever. Um, so you see that, but you get a double bottom, a definite double bottom on this, and then you can tell like when this is the trend's leading down, it's selling off, and it meets a price point of 550, which is also at a half dollar, which is about lining up multiple things. Okay, so this dip gets bought up at 550, and you see these long bottom wicks, these hammers. That means the buyers are in charge. The buyers are taking over. It's all about supply and demand. So when stocks pull back, they're the sellers are looking for an equilibrium, a price point, a happy medium of where the buyers feel comfortable buying. Most buyers will come in at a support range, and this is natural support. So it's only a given that the buyers have taken over here on these bottom reversal hammers, and then the trend goes up. See, and you can see there's a doji here, and it did sell off a bit, but then again, there's a hammer candle, and the buyers were still willing to pay 555. It's still well within range, and it gets bought up again, and it continues up. So you got 35 cents of play there on a roughly a $5 stock. So I mean that's big. That's really nice. That'd be a nice little profit for the end of day. And most likely you can see how the VWAP is trending down. This BCRX has probably been trending down all day, and I believe it was on that day. So this is a lot of shorts covering on this trend reversal, but because it's towards the end of the day, and a lot of shorts don't want to hold overnight because of margin restrictions and everything else. Like most shorts cover before 3:30 because that's when margins kick in. But there's that example there. Oh, sorry, one sec here. Okay, we got some more. We have lots of examples in this one. The CAL is a really good example. So first we have the hammer, which is it'd be nice if this was a little bit lower, but that's why I like using real world examples, because it just shows that nothing's perfect in trading. You need to be really quick. Okay, so you get the hammer and then you get the trend reversal up, and from where you would have got your signal, because this is a buy signal, because it gapped up, and most gaps sell off, but we'll get into that in one of the next video lessons. The gap kind of sells off, and then it continues up. So from where you got the signal at, let's call it just under $26, you could have rode this up for well over a point, which would have just been great. Your next short-term indicator is a hanging man. This isn't, I wouldn't quite call this a death candle, um, because of the time. I wouldn't quite call this a death candle, but in other instances I would, but not in this particular time. Like I play a lot of trading by feel, right? And this wouldn't feel right as a quote unquote death candle, but because it is a hanging man, it still rings true, okay? That the trend reversal, there is a trend reversal coming. Now, um, trading is a lot of hindsight. So looking at charts, it's very easy to say, okay, I would have done that. But for the most part, you need to react instantly. Okay, so this hanging man is a good example. Like, let's say you didn't get a really good entry, you would want to get out on that. Like, if you didn't catch his bottom entry and you got in on, let's say, a VWAP push and then bounce, and then reclaim. So you got in at about 26, I don't know, 40 or so, and then it went up to almost 27. You had about 60 cents. So you'd want to get out on that. That's a nice little profit, or at least take um, half or so, and then you could see what happens. But I would pull out there. So the next one on this example is a bullish engulfing, and you can see that it's a good trend reversal indicator as well, because it's selling off. It even breaks VWAP, which is fairly bearish. And then you get a nice little red body candle. It's kind of neutral. That's a pretty neutral candle. And then you get that bearish engulfing. It completely engulfed this price action. So that's very bullish, and you can see it takes off from there. See, and these two candles would have scared me out, but you see why it put up a fight around right around this area, because it's right around the whole dollar number of 27. So you got a lot of people taking profits and a lot of sellers taking over in this area, but it fought through for a little while longer and then just kind of chopped. So this is a really good example. I love this CAL example that I screenshotted. This is an example of tweezer tops. This is a recent example. And then you see how tweezer tops are a good indicator of a trend reversal. So yeah, and then even right here, right in here, you get a bullish engulfing of the body, not quite of the wick, but it's a good indicator that it's driving up. I mean, you can look and you can see a bunch of examples in every chart. Like this candle right here is a really bullish hammer. But you see how it's still sold off in the next couple 1-minute candles, but then it did reverse. Like, things aren't perfect, guys. Okay, but if you don't find your buy or your sell signal, don't chase it. It's fine, right? We have another good bullish engulfing on AFSI. This is on a 5-minute chart, so it's even better, right? The little bit longer the time frame, the more information there is per candle, right? So this is really good on the bullish engulfing. So it kind of the price it opens up and it just engulfs the pre-market trading. That's very, very bullish. So you definitely want to look at that. You know, and then there's a couple other small examples of stuff. Not anything really worth mentioning in this one, but you got a support line here, right? But that's for our support and resistance. But yeah, that's a really good example. This is basically the last one in the candlestick series. This is just to kind of show you and give you guys a general overview of candlesticks. You can do some research yourselves and and see what kind of fits your trading style and the certain signals that you like, right? It's because it's all about finding your way. It's all about finding your way. So here's a doji. Again, it's not a perfect doji, but that's what I'm trying to show you guys. Nothing's perfect, and I wish I didn't chop this chart off as much as I did, because this actually sells off right here, and that's another good indicator. But here, I'll show you. So anyways, price kind of opens up, it sells off. Because it's in the morning, you get a lot of emotion. That's why you want to give it the first few minutes of the day to let it actually pick a direction, right? Because you got this, and the buyers become in charge right in the it's kind of hard because it's right in the $2 area, but it did break the $2 support. But it's first thing in the morning, people are highly emotional, so and then the trend kind of comes up. But the small caps, right, although it's got a fair size float, these small caps, the price action can be a little sticky, because you see this candle, like I would sell, I would have got out, and then you would have missed all this upside. But small caps can kind of be a little crazy, right? So on this one, they call this a shooting star. I call it a hanging man. This one's a death candle, because it's got such a big wick, and it's after the price action has, the trend has followed up. This is a good indicator. And like I said, I really wish I didn't cut off this chart. That's all right. You guys get the point though, right? So there you go, guys. Like I said, you can do your own research. This is just to kind of give you a general overview and kind of the beginning into candlesticks. And I think I do a fairly good job of covering the ones that you really need to know. There's a million different fucking candlestick patterns. Don't go too crazy with them. Like I said, as I showed you in one of the examples, that it got bought up in the 550 area. You need to line up with other indicators. The more pieces of the puzzle you can put together, the better off you'll be. The more confident you'll be in the trade. But you remember, you got to be quick too, right? So as soon as you recognize it, either get in or don't take the trade, and then just move on. Don't waste your time. In and out. Day trading is fast. So the speed is very, very important in day trading. So, okay, guys, I hope that helps you out. And I hope you've all learned something. I'm sure you have. There's lots of good information there. And thanks.